Welcome to another episode on the trades you missed last week. So moving on, the last trade we were anticipating to play out was a bearish trade. So we were anticipating that price would come to this fair value gap and give us an entry to move downwards. So this is how it's played out. So we had a short position. Let me put this like this. There was a short position here. We are anticipating because price had previously tapped into a fair value gap here on our 30 minutes time frame. As you can see here, this is our 30 minutes time frame. Price tapped into this fair value gap, and this is a strong fair value gap because it has a breaker here. This serves as a breaker. So price tapped into this fair value gap twice and passed this other fair value gap that we're anticipating that it would tap into it and give us a demand that is a bullish, but price went past it, below it, and tapped into a fair value gap here. There's a fair value gap here on our 5 and 15 minutes time frame. So this serves as a demand area. So after price tapped this fair value gap here, it came back to give us an entry for a bearish trade. So this is how it's played out. So there was a sell setup here, and we would have put our stop loss right above this previous high here that created that fair value gap. And as you can see, this fair value gap also has a breaker right here. This is a breaker. This is a breaker right here. So we would have entered this trade at this fair value gap, and our take profits would be at the nearest fair value gap here. As you can see, there is a fair value gap here and also a previous low. So we wouldn't play with this fair value gap right here. We would have taken our profits here. So this is it. We would have kept our profits here and would have gotten a risk to reward of 3.26 ratio. So let's move this aside as our first trade for Monday. So this would have given us a bearish market. Moving on, after this bearish trade, there was a bullish trade. This scenario plays out like this. We have a fair value gap here, and this serves as a demand zone, as I said earlier. So we want price to give us a break of market structure, that is crossing above a previous high. So as you can see, price crossed above this previous high, giving us a break of that market structure. That is, I do not want to come below this area. I do not want to cross this area. So I'm giving you my reason for going up. And after price created this break of market structure to the upside, then it's giving that scenario that I want to move upward. So the criterion for you to go bullish with this setup is a fair value gap present at that same time frame, which is our 30 minutes time frame. So after price created a fair value gap on your time frame, you could use that same time frame to enter the market for that long position. So we would enter as we have entered before on our bearish trade. We'd enter like this and put our stop loss right below that previous low that created this fair value gap. And you see our price tapped into this fair value gap, meaning that this fair value gap is a spot for price to move upward. That reaction would serve as a bullish reaction. So this was our inducement. Price crossed below this previous low, serving as our inducement liquidity, and entered this fair value gap. After price entered this fair value gap, you see how it's triggered our entry. Our stop loss is here below this low, and our take profit should be at the previous high that created that fair value gap, because this fair value gap has been tapped into. Let me take this first trade out. You can see how this fair value gap has already been tapped into. So we would use either this high here. Let me take this out. We use this high as our take profits, and if you use this high as your take profit, you would have gotten a risk reward of 2.88. You can see 2.88 for our second trade. Or for a better risk reward ratio, we could use this high here, giving you a 3.27 risk reward ratio because of this fair value gap right here. You can see this fair value gap right here has not been fully tapped into, so we'll be careful and put our take profit right here. That would have been our second trade for last week. So moving on, let's go on to our lower time frame, because looking at all this, we need to be versatile and be flexible with our time frames. So since we are on our 30-minute time frame, we could either go upward to our immediate high time frame, which is our 1 hour or 4 hours, or we can just move downward. Then let's go and check our 5-minute time frame. So this is our 5-minute time frame, and you can see a fair value gap being tapped into. This fair value gap serves as a reason for market to go bullish again. So this is like a bounce for the market to go bullish. So you see our market retraced, tapped into this fair value gap and filled it up, then created for us a break of market structure right here. You can see how price closed above this previous high here. See how price closed above this previous high. Let's see it clearly. See this close above this previous high, indicating that I want to move upwards. So the next thing we need to do is to check for a fair value gap, and here we have it. We have our fair value gap here, meaning that price would react from this fair value gap because it has reacted from a previous fair value gap. So this would have been our entry here for a long position. Would have taken our entry from this fair value gap, and our stop loss should be below this low right here that created that fair value gap. Our take profit should be at the high, the previous high, giving you a risk reward of 3.89 ratio. And you can see a re-entry here because this is tapping into this fair value gap, and the next one is price tapping into another fair value gap. So you would have seen a retracement on that third trade, which is this is the third trade, fair value gap right here. This is the third trade, but an entry, a re-entry on that third trade. So you'd have entered here for a long position still and taking your profit at that same high. This would have given you a lesser risk reward ratio as a re-entry and giving you a 2.5 risk to reward ratio. So the next one on our list is the number 4 trade. Now let's look for our number 4 trade. So here we have our number 4 trade. So this is our number 4 trade, and we have a fair value gap to ourselves. This is a fair value gap right here, and you see how price bounce. You see how price tapped into this fair value gap many times, indicating that it's not going bullish. It's not going bullish. So price indicating that it wants to go bearish. It's created a fair value gap and also many taps into that fair value gap. So any move downwards that creates for us a fair value gap would be our point of interest, would be our entry point. So this is what we should look out for. So if you go on our 5-minute or 15-minute time frame, you would see a clear fair value gap right here, and you can see on a 5 minutes you can see a fair value gap and a break of market structure. At first, these are break of market structure. Where do we see a fair value gap? We have a fair value gap here prior to that break of market structure. So from here, we'll take our short position for our number 4 trade and put it here. So our fourth position should be, our fourth trade should be like this. The high that created that bearish fair value gap is where we put our stop loss. It has previously tapped into a fair value gap, so it's giving us a reason for a heavy short position. So our take profit should be at the previous low. So our take profit should be here. This is our take profit. Our take profit can either be this, giving you a risk reward of 2.35, or better still, a higher risk reward ratio just right here. This would have given you a risk reward of 3.05 risk reward ratio. This is aside. Then you can see our number 5 trade right next to it. This is our number 5 trade, and this plays out like this because price had previously tapped into a fair value gap here and also crossed a previous low, giving you a break of market structure. Then this fair value gap is valid, and we'll just predict that price would come back to this fair value gap and bounce down to give you a bearish move. So now we'll be anticipating that price would come to this spot because of this fair value gap, and as you can see, there is a breaker here. This breaker here would give it that momentum that it would possibly go downwards. So this is the number 5 entry. This is where we have our short position here also, and you have your stop loss right above that previous high that created that fair value gap. The next one is your entry here at this fair value gap, and your take profit should be at this previous low here. You have a take profits here at this previous low. Your previous low should be here because this low is below this one here. So we have a previous low. If you want a higher risk reward ratio, you can use this previous low right here. Let's use this previous low. It's not too high, but market would possibly go to that previous low. So this would have given you a 2.89 risk to reward ratio for our number 5 trade. So we have had quite a number of bearish trades. The next one is a bearish trade also. So we have a bearish trade here. This is our number 6 trade, and this is how it plays out. We have a fair value gap here. This fair value gap, price tapped into this fair value gap here. You can see how price tapped into it, and the price did give us a break of market structure here. You can see how price give us a break of market structure here. The next one we'll be looking for is a fair value gap. As you can see, is there any fair value gap here? Yes, we have a fair value gap here. We have a fair value gap here. So this fair value gap we'll be using as our reason for entry on a 5-minute time frame. So you can see our price tap into this fair value gap. Let's take our short position, and behind it we have a breaker enforcing that trade to go bearish. Now we have a previous high that will put our stop loss. And let's see our previous low here. Do you have a previous low? Yes, we do have a previous low, or a fair value gap. You can use this fair value gap as your take profits. You can use fair value gap, but it won't go anywhere, as it's would give you a risk reward of 1.28. So you would want to put your take profit right here at this low. This one would give you a risk to reward of 3.25 risk to reward ratio. So the next one is a re-entry. So we have a re-entry after price tapped into this fair value gap. The next one we have is a re-entry. You can see price moving downwards created for us a break of market structure again and a fair value gap. And remember, price won't tap into this fair value gap, so this should be valid for a re-entry. So this would have given you another trade here on that number 6 setup for a short position. So this would give you a risk to reward of 3.84. This would give you a reward of 3.84. This 3.84 is more than this 3.25. Why? Because you can see where this high is coming from. The whole fair value gap is what you would highlight as your entry, as your risk. But this one here, where this fair value gap started from, is quite small, so we have a higher risk to reward ratio on this part, because the distance from this high, let me take this one out, the distance from this high and this fair value gap here is very small. It's smaller than this, so that is why we have a higher risk to reward ratio than this one, the previous number 6 trade here. Let me go back. So we have our number 7 trade here. We have our number 7 trade here quite next to it, because we tapped into a fair value gap here. Now let me show you how we tapped into this fair value gap. This is another fair value gap here. See this fair value gap here. Let me take all this away to make it clean. So we have a fair value gap here. You can see the fair value gap. Price tapped into it, did not cross above this high. So this fair value gap is a valid fair value gap. Price respected this fair value gap, broke below this previous low here. I was anticipating that price would come back immediately to tap into this fair value gap here. You can see a fair value gap here after price tap into it. It's a fair value gap, and the next thing we need to look for is our entry, stop loss, and take profit. So we have your entry short position here, and your stop loss should be right above this high here, and your take profits should be at this low. Let me show you, at this low or this fair value gap here. You can see a fair value gap right here, so it's better you take your low there. But you can see how price did not reach that fair value gap, but it used this one and went back up. But still moving on, if you're on the trade, still you would have seen that price went back up, still respected that fair value gap, and boom, we have our take profit. This is our take profit. Price respected this fair value gap, went back up, and our entry was still respected. So the next one on our plate is our number 8 trade, and let's see how our number 8 trade played out. So we have a fair value gap here. Let's highlight this fair value gap. As price tapped into this fair value gap, would be anticipating for an entry here, because first of all, price tapped into a fair value gap. Secondly, price created for us a break of market structure, and the last one, we have a fair value gap here. So this would have been our entry here for a short position. So our entry is at the start of this fair value gap, and our stop loss is at this high that created that fair value gap. So the next thing we should look for is where we'll put our take profits. Our take profit should be at this fair value gap here, or this previous low right here. So you can see our price even went beyond this spot and crossed to give us above 3 points risk reward ratio. But it's better to follow your trading plan and stick to your previous low for your take profit, and this would have given you a risk reward of 2.71 ratio. So the next one we have on our list is number 9. Our number 9 trade is like this. So we have a fair value gap, price respected. Why? Because this fair value gap is quite strong. We have behind it a breaker, and we have a fair value gap here. So we have a fair value gap, and price tapped this fair value gap. As you can see this fair value gap on our number 9th trade, and we anticipate that it should give us a break of market structure, and we have for us a break of market structure here. We have a break of market structure here. Price closed above this previous high and created for us a fair value gap. Let me increase this to show you the fair value gap. This is a fair value gap here. This is a fair value gap here. Price closed above, and we have our entry then for a long position at last. So our entry should be at that fair value gap, and our stop loss should be below that low that created that fair value gap. So this should be your take profit. Your take profit should be either this previous high or this one here. But if we stick to this one here, it would have given us a risk reward of 2.22 risk reward ratio because of this fair value gap. Can you see that this fair value gap would have been quite dangerous for us, because this in itself is another trade, and that brings us to our number 10 trade. So our number 10 trade goes like this. So we have a previous fair value gap here. Let me highlight it for you. This is a fair value gap here. We take it up, and we have another fair value gap and a break of market structure. Let me show you this break of market structure. It's here. We have a break of market structure here, and we have for us an inducement. So this inducement indicates that price is rejecting that fair value gap, or it has created a liquidity. It has created liquidity for price to take out and tap into this fair value gap before pushing downwards, and that is our number 10 trade. Let me take this one out to show you our number 10 trade clearly. So this is an inducement. This is your fair value gap here. You take it up to this previous high that created the fair value gap, the whole of it, and you see how price tapped into it, moved downwards, created for us a fair value gap again, and we have for us our number 10 trade here for a bearish market. So this is it. This is how you enter the market for a bearish. So you put your stop loss right above that high that created this fair value gap. Let me take this one out. So like I said, we have a fair value gap, and break of market structure, then your entry. Then the next one is your take profits, which is below that low, below your previous low. You can see this is below your previous low, or you can also put it here. This would have given you a risk reward of 3.6 risk to reward ratio. See our price rallied down to take out all this low. See price here. So this was our number 10 trade, and that was on Friday. So the next one we'll be looking at is for the coming week, and we have for us a fair value gap here. We would better move on to our higher time frame, which is our 1 hour time frame here. So we can see the market very clear, and our fair value gap more clearer. So you can see our fair value gap very clear here from this angle. So we have a fair value gap here, and this would likely be a bearish market. So this is it. So we anticipate that price would go like this, tap into this fair value gap, and give us a break of market structure, breaking below this previous low, and tap into a fair value gap right here and move downwards. So that would have given us a risk to reward of I don't know yet. So this is what we'll be anticipating on Monday, and let's check out for the order flow that will be created as Monday opens. So see you guys on the next episode. I'll be back testing together on the trades you missed. Peace.